Senior analyst Bill Holter warns that the COMEX could default on deliveries in March of 2026. Damien, what does that mean?
Well, when they default, in essence, it means they do not have the silver in their vaults to actually deliver to the contracts. These contracts are mandatory deliverable contracts. And if it were to default, what they would do is they would completely destroy any of the credibility that the existing pricing mechanisms would have, and triggering a chain reaction that could collapse literally the entire financial system.
Okay, Damien, in January, as we know, is normally not a big delivery month or a delivery month at all. Can you tell us what just happened this last January?
This January really surprised everybody. They took over 40 million ounces in delivery requests on a month that's normally like 1 to 2 million. That really shocked everybody because that's 20, maybe 40 times normal demand. That got everybody put into projections of what would happen into March. That's the contract that everyone is focused on now. They expect 70 to 80 million ounces delivered in that month. The COMEX only has 110, maybe 120 million. The problem here is that they have 500 million ounces outstanding in contracts, which is what we were talking about, where you could actually collapse the system if they would have to default or put some of these quote force majeures into place.
When you talk about numbers like that, I think the bigger concern that I have is that this could become a bigger problem than just the silver market, much like the housing market became a much bigger problem than just the housing market. Can you elaborate on that?
Well, I mean, the key term there is leverage. A lot of people are saying this is really the canary in the coal mine. And when you have something like 33.5 million ounces taken out in 7 days, it's 26% of their inventory in a week was withdrawn. Unprecedented lease rates at 8%, putting a lot of pressure. Traders are paying extra premium to get early delivery because of the fact they know they're short or don't have the supply in the vault. Normally, the paper to physical ratio is about 350 to 1. Now it's over 500 to 1, creating this demand. The lack of confidence when this happens is what is going to collapse everything. And then, yeah, it snowballs financially. It starts with one institution and it just snowballs. And then they know who is weak and they all prey on it, and it becomes a death spiral.
Actually becomes more frightening than anything when you think about the fact of how fast those dominoes can topple.